Okay, well, welcome everybody. My name is Margot Weatherford, and I'm the owner and operator of International Coastal Properties. We sell real estate in North Carolina, South Carolina, and we can help you down in the islands as well. I'm here tonight with my team member, Stacy Owens, who lives on North Topsail Beach in North Carolina. Hi, Stacy.
Hi.
And we have a special guest with us tonight. This is Lauren Boger, and Lauren is the National Sales Director for Premise Mortgage, which is based out of Wilmington, right, Lauren?
That's right. Mm-hmm.
Yeah. Lauren has been in the mortgage industry for, I think you told me 15 years? 15 years, and she is in the top 1% nationally within her industry. So she is very well versed. And we wanted to bring Lauren on today because we are talking about a topic that's very relevant right now, which is how much of a house or how much of an investment property can I afford in this market? Obviously, we're seeing, interest rates rise. There's no doubt about that. And we also want to debunk the myth that it's not a great time to buy property. In fact, it's a really great time, and we're excited to have Lauren here as an expert to help us relay to all of you how you can still obtain financing and move smoothly through the process, whether it's a primary home or an investment or second home. So thank you for being here, Lauren. And Stacy, I know you had a question, as we'll just hop in. I know you had a question for Lauren right off the top. So why don't you go ahead and take over?
Okay. Lauren, I have a lot of buyers that got very nervous when interest rates started going up, and they were concerned that they were going to be able to afford a home now that interest rates were higher. Can you speak to that at all?
Sure. It's no secret that rates are higher. They went up, let's call it 3%, right? From, let's say January, December of last year, January of this year, until right around middle of June. They've been coming back down a little bit. So they're kind of steady right now. That sharp increase is something we really haven't seen before in our industry, just not over that short amount of time. So it caused a little bit of panic, right? It's important to know that increase in rates caused mortgage payments to be about 42% higher. And that in turn impacted a borrower's purchasing power. You and I talk about that all the time, right? But that's not something that like the normal consumer thinks about is how much power do they have to buy? So let's say it was 400,000, it could be reduced to 350,000. Or 320,000, something like that. So that coupled with the increase in values, right? Because a home is worth whatever someone's willing to pay for it. That's the reality. I mean, we as lenders go off of an appraised value, and appraisers look at closed comparable sales. So there was a time in the marketplace that was actually more difficult than right now, and that was about a year ago when the demand was so much higher than it is right now. So and what I mean by that is if a property is worth what somebody's willing to pay for it, then they're going over the asking price by $50,000, $100,000. So a lot of people were priced out of the market simply because of that giant leap forward in values. But the homes weren't appraising because those properties hadn't closed. So appraisers couldn't use those as closed sales. So you kind of have to look at it both ways of back then, people were having to bring a lot more cash to the closing table because they were having to make up that difference or that gap versus what they're willing to pay and what the home is appraised for now, right? So fast forward, the market has caught up with that super high demand. We have all these closed comparable sales. So we see less gaps in value lately. So that's super good news for anybody buying a home right now, whether it's a purchase, investment, or second home. Great news for a first-time home buyer because a lot of first-time home buyers, they don't have just, loads of cash to throw at a new property. So, when we think about kind of where we're at as an industry, that's, I think, the biggest takeaway. The fact that rates are where they're at and, potentially causing about a 30% decrease in purchasing power, we have to think as a lender, what can we do to offset that? How can we give back a little more purchasing power to our borrowers? and really with a focus on the first-time buyer. And the reason for that is we've had so much domestic and international money coming into our markets, right? People buying up properties because as inflation rises, they want to put their money somewhere that's going to also then increase in value. So we saw that happen. So Fannie Mae and Freddie Mac made a couple rules at the end of last year that made second homes and investments a little more expensive, but that really gave the first-time home buyer a leg up. So what we're seeing now is that first-time buyers are able to compete where they weren't able to before. They're having to bring less money to the table, and then you can get creative in financing with, well, maybe we can pay off some debts instead of using that money for a down payment, thereby increasing your purchasing power, right? Maybe we can get you a tax credit, adding eligible income to your file, increasing your purchasing power. So things like that, those are what we do as a lender in terms of creative financing to bring back purchasing power to especially the first-time home buyer. And then for second homes, investment properties, you know, buying the rate down, reducing that total monthly payment obligation also increases your purchasing power. So there's other tips and tricks and things that you can do in this market.
Yeah, definitely. Oh, I was going to say, Stacy, you had an instance recently, and I think Lauren was assisting the client in funding the loan. It was an investment loan, right? For a beach house on North Topsail?
Yes, one of my investor clients found a great property. And the good thing about the market, Lauren just touched on it, is before buyers were having to make decisions in like 24 hours because every good property was gone. And frankly, a lot of people were paying $50,000, $100,000 over asking in some points. Right now, the buyer is in a great position because properties are staying on the market a little bit longer and there is more inventory, so there's more competition. So even though their interest rates higher, like Lauren said, they might not have to pay as much for the property. So net, they could be in exactly the same position they would have been in 6 months ago because they would have paid a higher price with a lower interest rate. So Lauren made a great point when she talked about the fact that buyers actually have power now. My investor client was able to get a great rental property and it appraised. So he didn't have to make up that difference Lauren talked about with his down payment. And the house is rented solid the month of July, August, September, October, and he's already got some rentals for November and December. So that house is going to pay for itself, which is great for my investor.
Absolutely. And
Lauren, did you have much problem getting him approved for a loan?
No, I mean, you know, regarding appraisal, I mean, that's usually our biggest concern on, especially something like an oceanfront property. Like you said, I mean, you're a Topsail resident. I was a Topsail resident for 8 years. I've done a lot of loans up there. So, you know, when we talk about coastal properties, we're looking at the CAMA setback requirements. We're looking at rebuildability for a lot. So there are other things to be concerned with. That property, you know, at the end of the day, it was great and we got it done, and he's a happy camper. So it went well.
Yeah. And you put what, 20% down? Is that right?
He happened to be in a 1031 tax exchange.
Oh,
so
he was
sold a property in Charlotte, North Carolina to buy a property here because short-term rentals just pays more money to him. So he put a little more than 20% down because he was rolling over his profits from another rental property.
Right. Yeah, that's another call for us, is to talk about 1031s.
Yes.
Great opportunity for investment properties to avoid capital gains. Well, anything else, Lauren, that you want to share with our viewers about different products that Premise Mortgage offers in this particular market, or just some encouragement as, you know, a very seasoned mortgage lender and top mortgage, you know, salesperson on what would you do if you were a buyer in this market right now? How can we encourage them?
Yeah, I think there are two real key components as being a buyer. I think one, you've got to work with a great agent. I work with some great agents, and I help some that, are newer and they don't quite have that experience. And I'll tell you what, the agents that really know what they're doing, their deals get accepted. And I see a higher rate of those borrowers going under contract. So I think doing your due diligence as a buyer and working with an agent that's seasoned, like you two, is an important first step, because what you'd hate to do is make a ton of offers, get burnt out, lose hope and decide not to buy. And then, you're kind of back at square one. Rents are going up. I mean, rent's going up. It doesn't matter if you've dreamed of owning a home or not. I mean, really, it's the one financial investment that you can finance, right? And it's the biggest contributor to increasing your net worth. You can't finance your 401k. You can finance a home, and sometimes you can finance up to 100%. So, you've got to live somewhere. You're going to pay rent. You're going to pay a mortgage. You're going to do, you know what I mean? But adding to your net worth and improving your equity position, those are all really empowering things that we have access to here. And not everybody in the world can get a mortgage, right? They don't treat that the same way overseas.
Right.
So really, as Americans, we have an awesome opportunity to live that American dream and purchase a home and build net worth and build security. So that's kind of the hopeful piece of it. The second piece of that is you've got to work with a good lender. It's funny, I get asked a lot, and it seems so basic, but people say, why are lenders different? Why do some lenders know one thing and other lenders don't know that thing, right?
Mm-hmm.
As with any type of profession, you find that some lenders will really pigeonhole themselves into a certain category. So they'll do this one thing, and they'll do this one thing really well. But outside of that, let's say an 80% conventional loan, right? Outside of that, they're uncomfortable with whatever else it is, whether it's down payment assistance or mortgage credit certificates or USDA loans, jumbo, you name it, right? They're uncomfortable with that because that's not their bread and butter. So they tend not to know all those guidelines. And as a lender, you can really get into some hot water if you don't know the guidelines. Borrowers are putting up more due diligence now. It is what it is. And what we don't want to do on the lending side is pre-qualify someone or pre-approve someone not having done our due diligence and making sure that they can actually afford it, because that money they could be at risk of losing that if we don't do our jobs well up front. So having that good real estate lending partnership is key in A, winning in a transaction, and B, making sure you're closing on it.
Yeah, you make some really good points, and we did not pay her for that plug.
It's true though.
Yeah, and it is so important because I've seen it show up time after time, in my experience, not having a solid realtor or not understanding the value of a seasoned real estate broker. And then also, Lauren, you said, with due diligence money, I had an instance this past year where a client almost lost to him what was a hefty due diligence amount because of a failed lending situation. And it wasn't my client's fault, and at the same time, had we not pivoted and gone a different direction, he would have lost that money. So it is, even now as the market is cooling, due diligence money, especially in the state of North Carolina, has become a very important piece of an offer to sellers, and a decent due diligence amount. So when you're dealing with non-refundable cash, you do need to make sure that you've got, a trusted broker and a trusted lender on your side. So both very valid points. Whether you choose to work with us or not, please find a broker that knows what they're doing.
Yeah, and I will say, in those multiple offer situations, sellers, listing agents, they're looking to see if your lender is local. As a local lender, regardless if it's me or someone else, they're very concerned about their reputation. So they're not going to mess up, because it's so much more difficult to rebuild your reputation in a market where you live and work, right? Those kind of online lenders, they're more of a volume shop, and they're not in your market. They don't really care about the reputation. So, you know, if somebody loses their earnest money or due diligence, it's on to the next one. Whereas with us, it's what do we have to do? How can we make this happen for the borrower? You know, we're pulling every string we can because it's incredibly important to us here.
And you answer your phone on the weekends if needed.
Oh yeah. Yeah. I answer all the time, even if it's with a text message to say, I'll call you right back or whatever. Yeah.
Right. Yeah. And that's so key because at big banks, you don't get that. You're not going to get somebody until 9 a.m. on Monday morning, or you're not going to get somebody after 5 p.m. on Friday afternoon. So all great, you know, great valid points. Stacy, did you have something to add?
Yes, I was going to say that recently I was working with a buyer who was from out of the area, and they were in a multiple offer situation, and they had not gotten their pre-approval yet. And it was Sunday night. They had to have all their documents to the seller, and Premise Mortgage was able on a Sunday night at 9 o'clock after they put their kids to bed. The loan officer was able to get a pre-approval in because just they will work on the weekends and they will do what it takes to get those pre-approvals done and to close. I know that you represent sellers a lot, and sometimes sellers will run when they see certain mortgage companies because they know there's a good chance it's not going to make it to the closing table.
Right. If we see big banks, yeah, we may ask, you know, request if they can go with a different lender. And two, some bigger banks, you know, they bring in their appraisal networks are much more varied. So the appraisers may not be as specific to the area where the property is. And the last thing you want is, you know, an appraisal gone wrong where appraised value doesn't meet, like you were talking about, Lauren, when it could meet and when it should meet close or exact or over contract price. So all of those elements are extremely important, both on the seller side and the buyer side, you know, and to make your offer competitive as a buyer, having a local lender is really critical in my opinion.
Mm-hmm.
Yeah. All right, ladies.
Yeah,
well, thank you so
completely.
much. Yeah, thanks so much for being here, Lauren. We really appreciate your expertise and your knowledge. Again, this is Lauren Boger with Premise Mortgage, and we are so excited to have her on the call. We'll share her information at the end of the video. And again, Stacy, thank you for being here. You're our go-to girl on the beach. If you guys want a second home or an investment property anywhere, you know, well, let's say like what, Wrightsville Beach all the way up to North Topsail, maybe a little bit north of Topsail.
Yes.
Maybe.
Yes.
Yeah, then Stacy's here for you. And of course, we serve clients in North Carolina and South Carolina. So if you have any questions on either side of the border, we're happy to help. And I love adding value like this. I love having calls where, you know, we get experts like all of you, you two fabulous women, and we just share knowledge with buyers and sellers. So I hope that this video was helpful for someone, and please reach out if you're looking to buy or sell really anywhere in the United States, and we can help you and we can point you in the right direction. So thanks again, Lauren. We appreciate your time.
My pleasure. Thank you.
All right. See ya.
Thanks.